And this is Brad Matheny. Today is the 27th of January, and boy, do we have a big market move today. I have to start out by telling you that I'm very proud of all of you and all of the work that I've been doing for the past 30, 45 days. The crush pattern looks like it's setting up and carrying over into today, which will lead to a consolidation pattern in counter trend mode. If you're not aware yet, the markets are opening substantially lower. The S&P is currently about 1.5% off of yesterday's close, about 2%. My apologies. Tells me right down here. But again, the labeling. I mean, remember that I've been talking about this top, this inauguration top, for 45 plus days, and highlighting the volatility that's going to come leading into this deep V low that I keep talking about around February 9th, 10th, 11th. Now, granted, right now we're a little late on this topping pattern, but this move down today really confirms my research. It really goes to show you that when I'm coming over here and I'm highlighting these cycle patterns and telling you, where are they? Back over here, probably. Yep, here. When I'm highlighting this top, we should be moving into this top prior to, January, which, remember, I was talking about all of this back in November and December, more than 60 days ago, roughly. We move into this top, and then we consolidate into breakaway trends around the 23rd and February 3rd. Then we move into a V bottom pattern, and then we move into this 10th peak bottom pattern, move into the 14th strength. Then we move into the 21st, another V bottom or major bottom into weakness. And then we end the month of February in strength with disruption, moving into this major bottom peak, major bottom pattern again in March. So, it's pretty much telling you that we're going to have a top around the 21st, 22nd, 23rd. We're going to have a major bottom somewhere around the 10th, 11th, 12th, 13th or so of February. We're going to have another major bottom around the 21st, 22nd, 23rd of February. And then we're going to rally back out of that a little bit, possibly back up into the 590, 595 area, then looking for another major bottom setting up around March 21st, 22nd, 23rd, 24th, maybe into the 25th. So, you're getting a very clear picture, in my opinion. I can't make this any more evident to you than what I have been doing. And the longer term research that I do is even bigger and better, in the sense that we're moving to a broad, really broad scoping trend. So where we're at right now, let's come over here, look at the chart. This is a daily chart. We have broken down into this low area. We've broken this excess phase peak pattern. We should be, I'll leave some of these, but we should be now moving into the downward trend, into the excess phase peak pattern, likely coming back down into this area, maybe a bit further down into consolidation. So we are going to be moving, if the pattern holds up, we are going to be moving into this downtrend, likely into the 576, 580 area, where we're going to find our deep V bottom, probably back over here around February 9th, 10th, 11th, 12th. We could potentially, folks, move into a deeper, downward trend, moving into that February bottom. Remember, we have a secondary bottom around February 21st, which is right over here. And that bottom could be the consolidation low. So we could be looking at a consolidation pattern back in this area around 556 before we decide what we're going to do. We ultimately get to that March bottom back over here, and I'm assuming that we are going to be holding in a channel like this, possibly moving higher, and then move into a bottom and try to roll back out of it. So now this is going to be a scenario here. This is an example of a pullback down into consolidation, and then we roll up into a secondary bottom, and then we roll into this pattern here. So there's two separate threads that I think the market are capable of, and that is this deeper pullback low around 556, 560, or we hold around this 576, 580 area, roll upward, back up into these 604, 605 highs around March 6th, March 7th, and then roll into the major bottom pattern around the 24th or so of March. So, you know, if I were to tell you where I think we're going right now, it would pretty much be down into this area. So we're either going down into this area or this area. So we're going to 586, 587, 588, or 575, 76, 77, maybe all the way up to 579, kind of in this area or this area, which would be Fibonacci pullbacks. And again, I'm going to be smiling all day today because, like I said, I don't know anybody else on the planet that could have predicted this move as cleanly as I did more than 60 days in advance, almost to the day. I mean, I picked it right around here, the 21st, 22nd, 23rd. Was telling you guys that we're going to be looking at a topping pattern based on that cycle research I showed you back here. Right in here, looking around the 23rd with a breakaway, and that's where we're at. I mean, we're moving into that breakaway phase, into that topping pattern, major top, peak. That was our top. Now, granted, it's 2 or 3 days late, but it's there. It's right there. Okay, and this was literally predicted 60 plus days in advance. Now we're moving into this V bottom, peak bottom pattern. This is going to be essentially a pretty big rolling trend to the downside. Okay. And if you look over here around the 9th, 10th, 11th, we get that rally, carry trend, counter trend. This is on the 6th. That should be a down day, theoretically. Then we get the crush over the weekend. We get the evening star island formation right on the 10th. That is your deep V bottom right here. The Evening Star Island, Gap Defender, and Base Rally, Harami, and then Crush. That is your bottom right there. An Evening Star is a pretty good indication that we're going to get into a kind of a topping pattern, a breakdown pattern. And I think this week right here, 10th through the 14th, is going to be very volatile, and that's going to put us right over here. 10th, basically right here, 11, 12, 13, 14. So, you know, the bottom itself will likely be more in this area, somewhere in that area itself. Okay, so again, very pleased to have given you this information 60 days in advance. Hope you're able to profit from it. Hope you were listening to me and hedging into this major top formation over here. Very big move this morning. We'll see how we open up. But right now, the S&P is off 2% overnight, and we could continue throughout the day. The NASDAQ is down even further. Last I looked was down 4%. 3.42. We're going to be opening up down in this area, 511. You know, I mean, look out. Remember I marked the crush pattern over here last Friday, indicating we could get a big breakdown. It's actually looking like more like this. Okay, a big breakdown, a very big correction to the downside. This is going to be a huge move if we continue to weaken. Remember, we have set this excess phase peak pattern in the big red right here. We are breaking down. In theory, this means that the markets are going to try to find support. Again, the excess phase peak pattern as we roll up, we break down, we may find some support here before we attempt to break down lower, maybe into this area. Now let me cancel that and do this because we have the February low here and then we have the February 21st low here. So there's a pretty good chance that we're going to see this breakdown look something like this. Something maybe like that. Okay. And again, looking for this low, this 499 area to act as moderate support. That's the low of the flagging pattern. Looking for this to act as moderate support, possibly getting a little below that level down here into these previous lows here, which, as you're aware, is a fairly solid support zone. So again, I'm not expecting a massive crash. I'm not expecting, 15, 20, 30, 40% crash here. What I'm expecting is consolidation, disruption. And like I mentioned to you, we do get that after this low here around the 9th, 10th, 11th, 12th. We do get just like 2 or 3 days before we move into that February bottom. So we could get kind of a double bottom here. This was around the concept that we could rally up out of it. So again, if we hold it volatility here, let me get rid of these and show you. If we hold it at the lower volatility range down in this area, that's this flagging pattern here, low right here, then, there is a chance that we could flag into this area, set up a new bottom, and roll into a high up over here before we crush down into this area again. So, it's really going to matter or depend upon whether this low is broken and we get down here to the 485 area, or whether it holds and acts as support. I think there's probably a 50-50 chance that we're going to break down into this area and start looking for anchor longs here. I don't recommend buying into this low here. This is a pre-low, kind of a test low. This is the real low that sets up. And then this is the secondary low that sets up over here. So we kind of have that sell hedge here and here. And notice how I called this back in December. Move to cash, sell hedge now. And then I anchored here, start anchor longs, buy hedge now. Now we get this pullback. I indicated sell hedge top number 4. This was an exhaustion pattern. Now we're going to move past this into this deeper low, setting up around February 21st, 24th, moving up into this sell hedge around March 12th, 13th, and then moving into this deeper low potentially around April 2nd or so. So now understand that we're really, and I draw all over the place. I know you guys can complain all you want, but the depth of my research is really, if you figure out what I'm doing and you understand that I'm seeing trends 50, 60, 80 days in advance beyond anything anybody's really capable of doing that I know of, you're going to suddenly realize that, I'm onto something. That's what it boils down to. I can predict a top 45 to 65 plus days in advance. I mean, I don't know how to explain it to you, but let me just come back over here and tell you that this data, let me get it again. I've got this data going out to 2053. Okay, so I can predict things 30 years in advance based on this data, and it's all based on Gann, Tesla, and Fibonacci research that I do. So I can, within reason, 30 years from now, 20 years from now, 5 years from now, tell you what day you're going to see, or around, 3 to 5 day range, what time you're going to see major bottoms and or volatility and or disruption and or strength or weakness. And as I continue to build this out, it's going to give me even more data. So it's really quite incredible. Okay, next, gold and silver. Gold and silver should be moving into an upward cycle trend. We've moved into kind of panicking. So I want you to be aware that this is a panic move here in gold and silver with the selling of the markets. Gold and silver have actually held up pretty well. And again, you can see this channeling here. I'm going to just carry it out. We're kind of moving into this type of a pattern where we're setting up a bigger pullback flagging type of pattern here. Maybe more like this. And I believe that this flagging is going to resonate very quickly through an upward cycle trend, moving up, down, up. So we count it A, B, C, D, and then back to the upside. So in theory, by later today into tomorrow, we should be moving into a very strong uptrend. And again, we've got this double bottoming formation here, setting up a big, broad kind of a peaking pattern in silver, a double topping formation right across here. We're in this channeling sideways mode. If gold breaks out to the upside, like I suspect, then we're going to see silver follow, more than likely to the upside. And we're going to see silver attempt to move back up into this 3150 area. So in reality, we got to hold this area. We're right now at the come up A, B, C, D. We should be rolling back up into our breakaway E pattern. That means silver should be doing something like that. Back up to the upside. And again, if you take a look here, gold and silver pattern is setting up a topping pattern, then a flat down Harami. So the next couple of days, we have a flat down inside Harami. Both of these are flat. Temporary bottom on the 31st. Okay, that's good to the upside. Counter trend mode. Then we get a crush pattern, flat down, momentum rally, blank day, breakdown, and then rally. So we're going to be looking probably, let me come back, more along that February 9th, 10th, 11th base. And that means that we're going to be moving into, really consolidation and rally into that 9th, 10th, 11th base. So I would imagine that gold and silver will try to make a move into that 9, 10, 11 base and then make a move back out. So that's that 9, 10, 11 basing zone right over in here. We're probably going to get some sort of a pullback right in that area. Ultimately, though, guys, gold and silver are making a very good move. I mean, I'm not going to tell you too much, but gold and silver could move into a parabolic move. I really believe that gold has about a 30 to 45 day window, maybe a little bit longer, to potentially move up to 4,600 bucks. That's a $2,000 increase in gold. And I believe that silver will possibly follow that move, moving up into the 40, 43, $44 area. And that would essentially be a 50% move from where we're at right now, almost a 60, well, a little under 45, 50% move. So again, we're looking at a big breakaway move in metals. We just got to get through this consolidation. Metals, once they start to efficiently shake off this hedging move and really start to rally, it's going to be explosive. Okay, it's going to be very, very explosive to the upside. Right now, we got to see how this plays out. I expected metals to be quite a bit higher this week. I didn't expect the breakdown to be quite as aggressive as it was today, but it is what it is. The market gives you what it gives you. Okay, Bitcoin coming back off the lows. Big selling pressure overnight. Let's go back over here to hourly. You can see the big selling pressure here, hourly. You can see that I indicated we could likely break down into these channels. We found this support channel. Let me come back over here, see where that support comes from. Yep, right off of those highs. Okay, so we're coming across that support channel. We found support here. Really, guys, it breaks. We talked about we could have gone higher here, or we could have potentially gone lower. I highlighted this level here. We came right down into that channel, that same support channel. And, really it comes down to at this point whether or not, we're going to see that breakdown. We're at a new low. We're breaking downward. We set up a temporary little flagging pattern right here, broke through the apex. Failure, it makes sense to me that failure in this case would result in this type of a move down into this consolidation zone. So we've broken downward. We have rejected off of this low. So this lower channel is the only thing that's pretty much holding up Bitcoin, in my opinion, right now. And the next move is likely right down here. So we'll see how this plays out. But given this new low right here, okay, I very likely, very strongly believe that we are going to attempt to move back down into these lows. So you can see we've already been there. 92,000 back over here in January 9th. It's not going to take a lot for Bitcoin to move right down into this level, which again would be retesting this support channel and really just reconfirming this window right here, this price window right in that area. So be aware that I think that we're moving into a real breakdown phase here in Bitcoin, and we'll see because the markets are not done. This selling in the Nasdaq and the SPY, we're not done. This is my same chart we looked at daily. We're at 595.39, moving a little bit downward now. We're right in this area. We're not done. We've got, what do we have? About 10 days, 10 trading days, maybe until we get over here into this February 5th, 6th, 7th, 8th pre-zone. We should theoretically be moving moderately downward into this area, into this downward zone, trying to get out of that deep low. So understand that we're really looking at kind of a big, broad weakening trend, and I think that's going to drag Bitcoin down as well. Okay, I'm drawing all over these things, so I'll get rid of some of these drawings, get rid of some of these. Remember, guys, it's about trying to stay ahead of the market, not getting too far ahead of the market, but playing what is in front of you and playing the trends that are setting up. I'm very pleased to be able to bring this type of research to you. Like I said, I don't know anybody on the planet who can make these types of predictions. Now, granted, I am wrong sometimes. I'm not 100%. But long and short of it, guys, I don't know anybody who can label these things like I do and predict this move. This is a very big move. I mean, if I were to try to draw what this represents, this would represent a move basically from here down to here as a very big downward trend. It is a huge breakdown in price. We're about ready to try to close this gap right here. So again, I highlighted these areas before as support. I think we're going to probably see the markets consolidate right within this range. So 595 to 592 and a half roughly. And then eventually we're going to break down into these lows back over here. Now remember, these lows, I've drawn them a little to the left. It's not going to crush down here in 3 days. I doubt it. The lows actually set up around the 9th, 10th, 11th or so of February. That's a weekend. We go into 6th on Thursday, 7th on Friday, and then 10th on Monday. So that's a weekend setup. It's basically 2 weeks from now. Okay. All right, guys, let's go get some today. Remember, play what's in front of you. And remember, today's pattern is a consolidation pattern. So we're likely going to open up very low down in these low areas. And then we are probably going to consolidate into this type of an area. I doubt we're going to see any big rotating trend or big trending move. It's pretty much expelled all of its energy trying to get down into this area. And now we're looking at a good, solid consolidation phase. Okay, guys, that's it. Talk to you later.